we have our nose to the ground and our ear to the ground listening for what that's going to tell us. If inflation creeps higher in these numbers and the Fed even hints at all that they are going to raise interest rates, we may see a little bit more sell-off in the market.
.846, 746 Central. Good morning, folks. You're all tuned in to 99.9, the big dog, at WBLC.com. And every Saturday morning, Dale Smothers from RD Smothers Wealth Management hosts a program, Retirement Matters. That's on after the 9 o'clock news every Saturday morning right here on 99.9, the big dog. And Dale, welcome to the program this morning.
Thank you, sir.
Good to have you on the big dog. We thought it would be extremely appropriate to have someone with your knowledge to come in.
Sure.
And maybe calm the nerves of anyone with a 401k plan or any interest in the stock market that they may not be feeling really, really good about right now.
Indirectly or directly, we all have some interest in the stock market. You're exactly right.
Exactly.
And this is something that is on the minds of a lot of people. So let's just talk real briefly about what we know. First of all, number one, we know that the market does not like change. And there's been a great deal of change in the last 3 to 6 months. And this change has kind of been boiling up. We've been talking about it on this program, on our Saturday programs. We've been discussing the potential for tariffs not being a good thing. A ton of tariffs have been unleashed on the American economy. We're not here to debate the politics of that, but what we are knowing is that the market doesn't care for change. The second thing that we know, Larry, is that the market for the last 5 years has really been very non-volatile at all. In the last 2 years, we've not seen even the normal correction that we're typically seeing, which is as normal as snow in the winter time here in Kentucky, a 10% correction. 10% corrections are normal, and we have not seen those. And that leads me to really want to discuss three things that we've got to keep into perspective here. The three things that we absolutely have to keep into perspective while we're going through this market correction is, number one, that 10% market corrections are normal. And I'm going to expound on that in just a few minutes. But the second thing that I want to uncover here is that we have to take action in times like this. And taking action does not mean sell everything. And the third thing is I want to make sure that we're aware we've got to keep an eye on inflation. Over the next 3 to 6 months, as we see inflation potentially either go up, stay where it's at, or go down. It's going to do one of those three things. How is the Fed going to react to that? And that will determine what we should be doing in our portfolios. Let's talk about number one, the 10% correction. Like I said, it's as normal as snow in the wintertime here. We have not seen one in the last 2 years. We are at 9% down from all-time highs in the S&P 500. What I'm getting at is this is nothing to quote-unquote panic about. I think that if the snow lingers, we may see shelves begin to be, if we're keeping with the analogy, the shelves may be a little bit bare. The market may react a little bit unfavorable if we see a 10, 11, 12% market correction linger. We may see it essentially start to induce panic in the market. But we haven't seen that panic, fancy word here, capitulation. We haven't seen that take place in the market just yet, which means a 10% correction is normal, and we should react to it as we normally would, which is where we go to the second one, taking action. What do we do here, taking action? Well, you can't sell the farm because not everything is actually down. Believe it or not, a lot of these high dividend paying stocks, which we hold in portfolios at RDS Wealth, are up pretty significantly year to date, up 6% if we look at the basket of high dividend paying stocks. We talked about this before on the program. It's kind of like buying a house, and the price of the house doesn't matter as much if we're renting it out because we continue to get those dividends. These stocks have appreciated over the last 2 to 3 months, up over 6% year to date, and they're paying a 4% dividend, which means if you're looking for places to hide, that might be a good place. Another thing is the S&P 500, again, in a 9% correction. But if we put this into perspective, it's up well over 100% in the last 5 years. So we still see gains if we've been long-term invested in the market. Do not sell out at these lows. It is a wake-up call for a lot of people that are closer to retirement because they're realizing, wow, maybe I don't have as much appetite or capacity in my plan for risk as I thought I did. And the third thing, what we have to be able to do is pay attention to inflation. Now, I'm not telling anybody that's listening to this to listen to or watch inflation, but as advisors, we have to be aware of what's going on in the market with inflation. Inflation right now is probably the biggest indicator of how this market will react. If we see we've got big inflation numbers coming out tomorrow, we have our nose to the ground and our ear to the ground listening for what that's going to tell us. If inflation creeps higher in these numbers and the Fed even hints at all that they are going to raise interest rates, we may see a little bit more sell-off in the market. But what we expect is that inflation numbers come back either flat or maybe just a little bit lower, trending a little bit lower, and that's going to benefit everything. If that's the case, we actually could see a July rate cut is what's kind of being priced into the market. And if that happens, we could see this 9% correction that has went down rebound, which is good for everybody. If we see rebounds, again, take action. Make sure we're rebalancing your portfolio according to your plan and your risk. Now, every Saturday morning, we get on the radio and we discuss these types of topics for you, the listener. If you have any questions, feel free to call our office, 270-600-PLAN. Someone on the team will help you get in front of an advisor and begin to personalize your approach to retirement. The overall message here is don't overreact. Change is not good for the market, but it doesn't have to derail your plan. You can stay on course towards a successful retirement, even in markets like these. You and I were talking right before we went on air. If you were smart enough to make some defensive moves before this correction, now is the time to get a little bit more aggressive, and you could see the money that you have in your portfolio exponentially grow.
Well, there's a certain level of anxiety that's been created by this monster.
Well, there certainly is. And this uncertainty across the board, no matter who's at the helm, it generates sell-offs. But whenever we have timelines that are expedited way beyond what is normal, or we have a 30-year-old handbook and a playbook being thrown out and there's a new playbook being written.
And that's what's happening right now.
It's exactly what's happening, and it creates a lot more animosity. Now, I can't tell you. Here's the thing. The funny thing about markets is, Larry, it's impossible to predict what's going to happen 6 weeks from now.
Right.
6 months from now, it's challenging. But 6 years from now, if we look at that, 6 years from now, it's likely that the market is in a higher place than it is today, and we have to be positioned in a way where we can weather the storm through this 6 weeks or 6 months worth of turbulence to still be on track. We can help you do that at RDS Wealth. And again, tune into the show for more information.
There he is, folks. Dale Smothers. Catch him Saturday morning after the 9 o'clock news on the Big Dog. Dale, have a great day today.
You too, sir.
There he is. In fact, I call on Dale pretty often every now and again. I'll get a little nervous about the stock market, and I'll shoot Dale a text. Sometimes it's a text of anxiety.
That's right. And we hash it out there. I
Yes,
love it.
we
We
do.
are friends, and we have the same goals here, Larry. It's obviously to retire successfully.
Right.
And we can help you achieve those goals.
Right. Thank you, brother.
Yes, sir.
Appreciate you.